Okay. All right. Welcome, everyone. This is another session of Stop Losing, Start Trading. We also have Options Hour coming soon as well. So we're very excited to be back with Rosalie, and then we'll go over her trades. The intern, again, maybe was traveling with us. Let me see. Yeah, we're traveling with us at Eat Denver. So uh, the trading, given the tumultuous week, we'll see how the intern account is faring. But yeah, in the meantime, again, welcome back, Rosalie. What was your experience at Eat Denver? How do you feel coming back now?
Eat Denver was really fun. Thanks for having me. I was a little bit sick on Monday, so I missed our live trading show. We had our side event. It went really well. We did our live trading show. The market completely tanked, so that was a little unfortunate. But I was happy, to now understand risk management more and how to trade volatility and be prepared for scenarios like this where you can still make money even if the price drops or your predictions are wrong. So it was great.
Yeah. So this was, I'm sure there's going to be plenty of crashes. This was one that was during Eat Denver. Everyone was maybe away from their hardware wallets, but this happens. And again, with the intern and Rosalie's trades, we were able to see what to do. No need to panic because we sized properly. We were able to just uh, have a type of trade that is not putting us in trouble. So that even though we were out of our kind of comfort of our homes and could not trade, we're still able to somewhat be able to weather the storm. So again, what we do here is that we go over Rosalie's trades, what she feels about the market, and try to create a portfolio that could match uh, assumptions. It's not financial advice. We're just here to discuss how to use panoptic and options more broadly, but this is more education than actual trade action. So don't follow here what we say. It's not financial advice. We have to say this every time. Uh, and before we move, let's quickly recap the week because the price action was pretty wild, and unless you're careful about it, you could get stuck in a over leveraged position or any type of position that will not be kind of good for you. So ETH is the one that we also look more often than not is down on the week, up over the past few days, but the price action that we saw before, during, and after ETH Denver were pretty intense. I think this was the first day of ETH Denver, went down from 2,800 to 2,200. So $600 drop. I mean, I guess 15% drop. If you're trading on leverage, if you're trading options, if you're trading on leverage, it could be a perp, could be anywhere else. Okay, let's keep it like that. It is maybe a dangerous time, and you have to react. The way that we see trading happening in Panoptic and also more broadly in options at the retail level is that you have to manage the risk before it happens. So you size properly, don't overextend. And in our case, we were fine. That 15-20% drop in a few days did not affect our PNL too much. Even though the price went down 15%, the overall portfolio went down by much less. So this was kind of very interesting. Again, the Bart signal here, the fact that Trump tweeted and untweeted, or I don't know what happened there, did create some volatility over the past few days, but overall we're maybe stable 2,200. Some people have said about this, but it's it's like markets move in a way that's hard to predict. Bitcoin's also around 90K. Solana has had a good week, 140. Cardano, of course, with the announcement of that of Twitter of Trump, was good. But yes, any token again had a very tumultuous week. One thing that I like to look at, and it's going to be something we do maybe more closely, is the Ethereum Volatility Index by our friends at Volmex. When you look at price action, going up or down is somewhat arbitrary. The volatility never lies in a way, and what we see is that uh, the price moves we've seen coincide with spikes of volatility activity. So what we had, uh, the downward move we've seen is not as impacting the volatility as much. It's mostly these recent trades or the recent tweets, these volatile sources of information that increases volatility. So what we're seeing is that over the past week, there's been huge spikes. Now it's actually over its maybe 2 months or 3 months average. If I were a trader trading monthly options, now would be a good time to enter. You're kind of at a local maximum given the past week, past few months, I mean. And that's why maybe the title of this show is trade the vol, not the token. So volatility being higher than what it is on average is a very good signal to enter the market. At least on ETH, could be on Bitcoin as well. But yeah. So I don't know if Rosalie, you've had some time to internalize volatility charts. But yes, what's your take? If you were to look at volatility, does that confuse you, or is it still kind of something in the works? Or what do you feel about it?
I guess, yeah, I mean, this chart kind of confuses me. I'm not really sure what it really means, although I do know that, there's always going to be volatility. Things go up, things go down. And so you have to figure out a way how to have that play for you, not against you, which, I've been learning with strangles and everything. But I'm interested to know how this compares to our volatility measurements on
Yeah.
IOI as well.
Yeah, this is the vol index is from I think Deribit or regular exchanges. It's backed by billions of dollars worth of trading, so it's pretty accurate. In Panoptic, it is somewhat inefficient and does jump around also a bit more. What you see here is 77% IV volatility, which is on average, again, about one sigma. So 2/3 of the time, you expect the price to go up by, uh, again, up to 78% up or down. Maybe like ETH could go to 3K or 1,200 with some certainty
Yes.
within a year time frame. We don't know which way, and that's the hard part. But yes, the fact that it is quite high, could be 100%, 200%. Quite high means that it is on the move, and it's more volatile, more movement possible between now and what it was a few days ago. So, yeah. Speaking of which, we can go to the main trade page and go over the Panoptic Interns portfolio. One thing that we've released last week, but you can see as well, is we can see all the trades that have happened over the past day. And one thing that's interesting is that Intern shows up. So Intern was busy early this morning, I think. So Intern, we can see what they've done. Seem to force exercise, seem to have burned a position, reopened. So we can have a quicker look. But before we go there, again, we will do the overview of the market. Uh, if you remember, the volatility on the Volmex chart for ETH was 77%. Our own internal volatility measure seems to be higher, so 84%. And that's one thing. The volatility can increase due to the market moves, and that's one way to take volatility as a signal. But on Panoptic as well, the volatility is higher than, say, Deribit. So there is a clear kind of opportunity here for either volatility arbitrage or taking this into consideration, because the fact that the market tells you it should be 77%, and Panoptic, which is kind of growing but is still somewhat inefficient, tells you, hey, it looks to be 84%. So that means there's an opportunity to arbitrage out this inefficiency. And what this means, because it's higher, then it's a good time to sell or at least create new positions to help equilibrate that IV. So how do you feel? Should we keep trading ETH, or try to look at different markets?
Yeah, let's take a look at what's happening on ETH. I think there were some positions that didn't look too good, so kind of want to learn a little bit more about
Yeah.
managing those. Yeah.
Okay, so we're now in spectator mode. We're looking at the intern's portfolio. If you think about it, given the wild price moves over the past week, we're up $94 on our investments. So this is actually pretty cool because most of that comes from the directional plays we've done. And going back to the eternal question. So yes, we have the dashboard. We have three markets. What do you see? What do you want to seek again from that information?
Well, I mean, now I've changed my mind. I would like to look at Bitcoin, ETH, trading that ratio. Looks like it got us most of the profit in our.
Exactly. Yeah, perfect. So let's have a look. This is the Bitcoin ETH we traded ratio. This is a trade that you cannot do anywhere else. Uh, and yeah, from that chart, and maybe can you remind the audience what was the initial feeling about that price here?
Yeah, so this was, I believe, bearish on the ratio. We removed some unused liquidity, put it in range so that we could start earning fees and um, selling that call option in range. So it's gone up almost to the max.
Yeah.
It was a little lower last week when we checked in on it. So looks like we're getting close to, I guess, our cap wins. So
Yeah. So, and yeah, definitely, this is a bearish trade on the ratio. We use some tricks to make the capital efficiency go way up because at the end of the day, we're controlling a large number of contracts with a very small capital requirement. What we want to see is the premium going up. So this is always accumulating. This is adding to our P&L. This is getting paid for taking that risk. And over the past month, actually, we've earned 6% in premia alone. So 6% in a month. I don't know, maybe 70, 80% APY if you want to do this trick. This is a good trade because you're getting paid the whole time. And if we're just to look at the premia, I'd be happy taking 6% in a month. But in addition, this was a directional play. You were right directionally, and the price did go down and added an extra, I don't know, 14% to your P&L. So 20% in a month in your trade. How do you feel about that? Should we keep going, or should we uh, close and kind of maybe redeploy, or just kind of be happy with that win?
I think, yeah, I mean, there's still a little bit more gains we could get out of it, but I feel like because it worked well, it's been 28 days. It's a good time to close this position and see what else we might want to do in this pool.
And maybe also, is your assumption still the same? Do you are still bullish, bearish the ratio, or
Yeah,
yes?
I think so. I mean, Bitcoin kind of recovered a little bit, but from everything that I've been hearing and seeing, I think, yeah, it'll, I don't know, market's not looking too good at the moment.
Perfect. So if we can definitely set up a new bearish trade, we can definitely have this position get the profits, move on, and create a new one. And maybe we'll focus on this today. I guess we'll come back to this to see what else we could trade. But yes, this is worked perfectly after 28 days, which is a month time scale. Did exactly what we wanted. The key point is that we're not quite at the max, but there's not much more. Like the price move is we're close to here. So yeah, that would be a good candidate to close. So this is a good one to, again, you made $80, and this is the bulk of what we see. This is a good trade. Again, congrats. So at the end of the day, what Rosalie's doing is these directional play that reflect her kind of directional assumptions, and if it works, in that case, we had almost like 8 out of 9 trades worked. This is great. We want to bang these high probability trades. We want to make sure we get lots of wins, and we can pile up the $80 like that on a $10,000 account. This is actually kind of pretty good in a month, and to maybe able to shoulder the move. So Bitcoin ETH worked for us. We can set up a new one. We have ticker Bitcoin. Speaking of Denver, we went to the ticker Bitcoin event. We met the team there. Very exciting crowd of people for sure. But we also bragged a bit about your trade. So can you tell us about this trade on the ticker Bitcoin ETH pair?
Yes. So yeah, we put this in a little while ago. I think we kind of chose a bullish, more bullish to neutral outlook here, tried to capitalize on volatility, like we mentioned. I think before I was pretty bullish, and then I was like, oh no. So here we're just trying to trade the ratio. The ratio looks pretty. It's been moving at the similar rate, right? So that's kind of what I learned, and we reevaluated the first position.
Yes. And okay, oh, I'm hiding it. Yes, the key point, this was a neutral trade because you were equally bullish on Bitcoin and ETH, perhaps. And the type of trade that you create for equally bullish on both code tokens is neutral. It's a delta neutral trade. We have selling a put option, selling a call option, both at the same strike. If you look at the range, it's almost exactly at the same place it started. So this is also a very good play because directionally you were right, it stayed stable. We held this for 13 days and we're already at 6% return on the premium. If you remember, Bitcoin took 28 days to do this, so about 2.2 times faster to get the same premiums. That tells you how volatile it is. and it's making money. There's nothing wrong with it. We can keep going. One key point that I want every LP to look at and realize is that because we're earning fees and because we create this delta neutral trade, the break even points now get wider and wider. So not only are we making money because the price doesn't move, but if we're wrong or there's a price dislocation, we can still be in the green, still making a profit because we're accumulating these fees. So the neutrality of that trade means that we're protected on both sides. So if there's a up move, down move, we're close to being that even if the price leaves the range, we're still making money. So another good, very good trade. It's not working against us, so we just keep going.
Yeah.
All right, and it's making us again. We size this so that it's not something we will worry about. We had $400 in that trade. We made $20, I guess. A pretty good chunk of it is coming from these fees. So yeah, it's pretty good. So 5% return in a few days. Finally, I'll go quickly over the two delta neutral trades that we had on ETH, USDC. Um, one we closed, one that we suggested intern to close, and one that we kept on. So this is another example this is an example of a trade we kept on. So yeah, what do you see here? We're 0.01% in the green. But how do you feel about that trade? This was a neutral trade, but it worked against us because the price dropped.
Yeah, I think this trade worked for us for a while, and then I guess the price dropped a little bit too much. And so we're still, accumulating some fees, but if it drops more, that slope kind of becomes a little more risky, right? We get out of that delta neutral area and into a more dangerous slope. So
Yes, and the break-even point currently is about now because we put so if it does go below 2180, which it has in the past days, but it bounced back, then yes, we will be not earning fees, 100% exposed to ETH. Definitely not something you want to keep on. It's in and out of range, but not much. So I would also say that this might be another one of those trades where it is what it is. The market dropped. We were able to still make money, so no one is going to be sad about that. But because the fees were high, but not high enough to compensate, we do this for scratch and say we don't lose anything, we don't make anything, but we move on. And that might be the one thing that I would suggest also the intern. Either relocate this liquidity a bit closer, or if you think it's still going to go down, we can also create a negative delta trade. So yeah, same thing. That I would recommend to close this and wait for either a different price move or just kind of do something similar that the other trade that we recommended on last Friday was to close a losing trade. So in that case, the account lost a little bit of money, but asked to redeploy in range and in a way that was kind of a bit more delta neutral. So this is the other trade that intern did earlier this morning, and also that was kind of created. So this one 26 minutes ago, delta neutral. This was what we recommended. Capitalize on the new price move, capitalize on that extra IV that increases the premium. It's already making 15 cents in 26 minutes. But this is another trade that is now re-establishing our delta neutral case maybe in the short term on ETH and kind of having this be also capitalizing on the high IV.
looks good so far. Yeah, I'm curious to kind of see what will happen the next couple days. Market's
Yeah.
looking very volatile, so definitely want to capitalize on
Yeah.
that a little
And
bit.
the numbers to look at, it's this range is from 1750 to 2800. So quite large, again, 1,000-ish dollars of width. In a month, the market tells us it could certainly exceed that in both ways, but in the short term, we expect to collect fees for the next week or two, unless there's a big move, but we'll see. All right, so quickly, we had the options hours as well, so I don't want to have this be taking long, but we'll do a quick trade on the ratio, which could be what the intern kind of now considers, given that they've made money and they were right. So similar to before, what's your assumption on the ETH BTC ratio?
I'm still bearish on the ratio, but I would like to maybe, yeah, do a more interesting trade. Yeah, maybe call spread, or is there something more bearish neutral we could look at as well?
There could be something bearish neutral. In the neutral case, there is always so one thing that I want to ask you also. So bearish or maybe bearish neutral. Do you want to take a bit more risk than before and create a undefined risk position, or still maintain a risk averse but maybe less potential loss approach with a defined risk trade?
I think from everything that I've learned from Tom Sosnoff now as well, I think it might be fun to do something with undefined risk and capped gains, although that might sound strange. Um, that's kind of what I learned from the pros.
Yeah, exactly. And this is the risky part. It's unclear why someone would be subjected to a lot of losses. And this is the thing we're talking about. If the price exceeds or goes the wrong way, we can lose a lot. But yeah, no, maybe this was a trick question. So one thing we could do is this would be a extremely maybe more risk, but then capital efficient trade because you get a lot of funds out and would go the 30-ish or 25 delta depending on our assumption. The strike we traded was traded, so we'll go maybe here. There is still that ability to buy someone else's option that is you can do this for free, so that's very attractive. And let me just go there. um, yeah, this one is a bit out of range too because it moves. So if you look, this strike is out of range, and we could do a tighter call spread, which is repeating the same strategy we had before. And it's true that this one, even though we buy something, it's for free, so there's less cost. So it's almost like best of both worlds. We have protection and also a naked option.
Yeah,
Um,
this looks, yeah.
and yeah, the most 0.001. So use $100 if we're wrong, but then you can make 30-40 bucks, I guess, and we can change the size. So in that case, yeah, I would maybe recommend redo this. I didn't see, but that strike is also out of range. So we buy it for free, same way we did before. So this allows us to be protected against a huge reversal that could happen that makes the ratio go up, but it still allow you to kind of gain on the way up. So yeah, maybe on the and then does that payoff looks? I mean, we've seen this play a couple of times already, right? And it worked for us. So you're comfortable maybe redoing the same trade here?
I think so. Yeah, kind of moving some more liquidity into the new range is probably a good idea. And yeah, I don't think there's anything too dramatic that's going to happen, like too positive. So I think the market's kind of on its way down. I'm not sure, it'll recover and go back up and down, but I think it's like more on a way down than it is.
Perfect. So yeah, that's good. So we recommend the intern to look at this very quickly. I'm gonna bring up the liquidity chart on Uniswap. So the the panoptic liquidity is somewhat blocky. There's a few trades, but it's mostly in range. This liquidity is out of range, but this is what the panoptic traders have in terms of liquidity. This is what the Uniswap liquidity providers have. So a little bit of liquidity is in range, but a lot of it is out of range. And this is also uncommon. You want to see LPs rebalancing and redeploying, or if it's an option trade, you want to kind of roll your position. But because the liquidity is quite low, compared to maybe like a few ticks above. That is also increasing the volatility. So what we see here is that the ETH BTC volatility, the ratio is 80%. We show IV percentile, so it's kind of higher than 70% of the time. It's again only more than 30% of the time, but it is actually pretty high. This is another opportunity for the ETH BTC ratio because as the price moved, the correlation between the two normally means it's 30-40% IV. This is extremely high, 80%. So that's again 100% because liquidity is out of range. There's not as much in the current price area. So that's also another trade that even if you're neutral or bullish or bearish, premium will be higher because IV is much higher than what it should be at 80%. So this is also another opportunity, not just the tokens, but the vol. A lot of the aftermath of price move is that liquidity taking a long time to redirect and readjust. And here, what we see is that there's probably tens of millions, if not more, of liquidity out of range. So whoever is in here gets a ton of volume, but also gets a larger share of the fees per unit of liquidity. So, but yeah, all right. So this is our recommendation. I'll bring back Brendan for the options hour, and we'll see how it goes. But hey, Brendan, let me stop sharing here. All right.
Hey, great to
Great
be
seeing
here.
you. Yeah. So again, thanks, Rosalie. This was great. We'll see how the interns if he listens to us. But yes.
Fingers crossed. Bye.
All right. Bye bye. Hey, what's up, Brendan?
Happy Wednesday. Yes. Yeah, it was great. Great seeing the trading in person last week in Denver too, with the intern and professor, and also with Tom, the legend himself. So it's been a wonderful weekend, and just getting back from Denver, everything's super bullish, and I guess except for the markets, but yeah.
No, that's
things
right.
have
I
been
think I
great.
shared my thoughts a little bit, but the sentiment, what we saw at our event, and maybe between teams that are building at the app level, is extremely bullish. Like we've gone through roll-ups, alternative layer ones, layer twos, optimizing. And now the next step is definitely the app layer. And meme coins being kind of on the way down, like there needs to be a new thing that kind of captures the attention. So there's a lot of upside, a lot of opportunities for building new products, new teams building kind of unique applications. And even if you're an investor, I'd say that the app layer has now been repressed for so long that there's going to be a pendulum swinging, because all of these faster, better layer one or twos that have launched, they need apps, they need builders, and this is also where most of the use cases come from. So yeah, I'm again, as I said, I'm extremely bullish the app layer of blockchain and DeFi, which happens to be where we're at. But yes, what about you, Brendan? How was your feel? How did you feel about the market sentiment there?
Yeah, I totally agree that like we're still looking for our ChatGPT moment of use cases. So, we can keep building infrastructure, but I mean AI built infrastructure for decades and had all its cycles of no adoption, until the app case came out. And so yeah, we'll see with options are definitely a very practical use case. And then it's just what are you trading on? Some people might say that we're still trading on virtual tokens that don't matter, but obviously matters to some people. And then of course with RWAs always around the corner that haven't come yet, but eventually.
I mean, the
Yes,
24/7 nature of blockchains means it has a clear advantage. Again, we saw Trump tweeted on Sunday, despite the markets being closed, it is like sometimes people want to trade 24/7. You don't need to shut off your market for 3/4 of the day, or even the futures market are 24/7, but there's always a period where we can trade at the end of the day. So there's definitely advantages, whether it's for RWAs or regular stocks, to trade on chain, I'd say.
yes, for sure. That's the part of the natural global order of things to be able to shop at any time of the day or night. But just a couple of announcements since it's been a while since we've done the options hour. So grow.panoptic.xyz is live. Maybe we can share that here on the screen. But make sure to check out the new passive liquidity platform. We've also recently been kind of working on the landing page, thanks to a lot of your guys' feedback. And so we're continually updating and iterating that. But it's right now the only place that you can passive LP into V4 pools and earn yield from no impermanent loss. So the yield comes from other depositors that come after you, and then also people who want to borrow your funds to leverage LP into Uniswap, and also option traders on Panoptic. So there's three main sources there of yield for passive users. And we have some points going out to the pools. And if you look for the little sparkle on the markets, it will indicate where you can actually get not just passive yield, but on top of that, Panoptic points, which is our kind of points program to help incentivize the markets. So yeah, right now, are we able to pull up kind of the APYs and just take a look at what people are earning on Grow? I think you're muted.
Yes,
There.
let's see. I'm going to share my screen. So this is the landing page of the Grow app. Again, we try to tell upfront what's important. Is the LPing with no impermanent loss? So you are exposed to LPing through that lending activity as opposed to being you yourself trading. So we have, again, several markets present. And then we show the returns for these lending and then lenders components. But yes, Uniswap V4 has had a pretty good return, 9%. ETH USDC, which is the one that has gotten the most volume in TVL, is pretty healthy at 12%. But could be BTC, could be ticker Bitcoin, Wrap, II coin, any meme coins, any pair. Yeah, USDC Prime, interesting. You can earn yield on those. So we try to make it easy to discover new markets. And then from there, you can also see the APYs for each token. But yeah, this is definitely something that is aimed towards passive LPs, those users that haven't been kind of able to LP actively on Uniswap. You can always use Panoptic Grow to earn and kind of yield to that lending activity.
Yeah, and this site is a lot simpler and easy to use than the other app.panoptic.xyz site. We're trying to make this even like where you can be on the fly, pull up on your phone and deposit and withdraw pretty easily from anywhere in the world too. So one thing to note too is the yields here on the V4 pools are basically zero. That 9% on the V4 pool is because of other depositors. So right now, we haven't activated the options trading and leverage LPing on the borrow side yet. So that'll be coming soon on app.panoptic.xyz. But if you want to deposit in there first, you'll still be earning points every day for your deposits. And then after that, we should see yields, go up as the actual borrow side is activated on our site. So stay tuned for that in the coming weeks for V4 options trading. But you can deposit right now and start earning points. We also wanted to bring back our boost by popular demand. So any early depositors in any of those shiny purple sparkly pools in that top left corner will actually get a 2x boost. And so this boost translates, to I think a couple of thousand or tens of thousands of points.
Oh, more than that.
Can't remember.
Yeah, we're doing something weird in a way with the boost, but it's allowing you to get a fixed amount of extra points. And this fixed amount has to be earned over time if you want, so it's not automatic, but that means that every block that you're in the system, you earn twice the fees, twice the pips as someone that doesn't have the boost. And this boost decreases over time and decays. But if you keep going for, several weeks, you'll be netting that extra. And then the 2x would mean about 100,000 pips more. So 100,000 more pips than not doing it.
Forgive me, a lot more than a few more thousand, a few 100,000. So yeah, 100,000 extra pips. If you keep your deposits in there long enough, it's a limited time boost. And it'll be going for the next week.
Exactly. And I'm looking at the pips leaderboard, but this is a lot of folks that have been kind of trading since the beginning are earning a lot of fees and a lot of pips. And then I wanted to bring a specific attention. But then the boosts help quite a bit. So this account here earned 320,000 points just by their activity. But because they had the pips and the boost, they have 1.1 million. So this might be one that has a Uniswap V3 position, perhaps was a beta tester, was able to collect a bunch of boosts. Same thing with India. Oh my God, this one was click all the boxes. So that person earned some base pips, but because of the boost, got a lot more. So that's something that we also want to reward. So if you have a wallet that touched Uniswap V3 on the LP side, you have a 5x boost also to get it in. So and these are additive. So that early depositor and 5x means you have 7x, 700,000 pips extra.
Wonderful. Yes, the boosts are a great way to earn more of these points. And this leaderboard will be updated. It hasn't been updated for about a week and a half. So do note that if you are waiting for your boosts and your points to update, that will be coming soon. We're working on a way to actually streamline this, make it update more regularly. But do know that you are earning points right now, and that leaderboard just needs to sync on our end.
All right.
Well, wonderful. Let me share my screen here, and today we'll do a little research session on the panoptic markets. And so there is a term called loss versus panoptic. So this is a play on LVR, a common risk metric used for LPing in Uniswap. And so there is kind of this loss that Uniswap LPs are leaving on the table by not using panoptic. And so here I analyze kind of what that loss is, define it, and also see historically what it has been in our first couple months of launch. You can see my screen okay here?
Yes, that's perfect.
Sweet. All right, so yes, so I'm analyzing one position here as an example, just to kind of help you conceptualize this loss versus panoptic. So for those of you who don't know what panoptic is, it's basically a wrapper on top of Uniswap's LPing that lets you earn additional yield by using your LP not just to provide capital, liquidity in the spot markets, but also to provide capital to trade against for options buyers. So basically, it repurposes LP tokens so that it can have dual use. They can provide liquidity, but they can also be earning extra fees from option buyers who are shorting the LP token, borrowing it to use it for some other use case. And so they're two very, very similar positions. Basically, you can LP at a certain price range, in this case, 2,900 to 3,700. You could do that directly in the ETH/USDC pool of Uniswap, or you could do it indirectly, like through Panoptic and then back into the Uniswap pool. So it's the exact same LP position, same price range, same pool. It's ending up in the same place in Uniswap. However, when you deploy through Panoptic, you kind of unlock this extra fee revenue where your tokens can be lent out for this dual purpose. And so analyzing this position specifically, if we look at this position, these dates are probably wrong here, but on the LP directly into Uniswap, you would have made $61 in fees on this position, whereas in Panoptic for the exact same position, you would have made 3 times more, so $186 here. So you can see it visually as well. When you earn fees in Uniswap, you're earning it in both tokens, depending on if the price moves up or down. So USDC and ETH. And then the green here is kind of the total ETH fees you would earn by deploying into Panoptic. Whereas if you had deployed the same position in Uniswap, you would have only earned like less than 0.02. So you would have earned 0.01 ETH in Uniswap, but 0.04 ETH in Panoptic. And then on the USDC side, you're earning also about 3 times more, $26 in Uniswap versus $80 in Panoptic. So this kind of purple shaded area here is that difference. That's the loss that for the same basically position you would be foregoing by not using Panoptic in this case. So yeah, does this make sense as far as what the loss versus Panoptic is for this example?
Yeah, for sure. So again, not sure about the dates. I don't know if it's 2009 or something else, but the key point is that the market can price the fees now more accurately. Whereas before it was only for like maybe realized price moves. And even if you had like arbitrage trades, some of those fees could go elsewhere to validators. So the vanilla LP side is definitely on the inefficient side of the market. You cannot necessarily like find the price this accurately. So yes, with Panoptic, it's not because we pump the numbers that says, oh, you get three plus more the fees. It's because it's in demand. Someone is willing to pay for that extra optionality. So a buyer is happy to pay $186 for that position. They would be even happier if it stayed at 61. But because now we have kind of this feedback, the market can find the right price. And that maybe is the best message we can say, is that at the end of the day, whether you're a buyer or seller, or you are long or short vol or doing anything directional, you want the fees to be accurate and fair. And it's only by allowing the two sides of the market to talk to one another find this to be true. So I would say that the fees on Uniswap are likely the more correct and long-term sustainable ones, and without removing anything from Uniswap. But because you cannot tap into that low fee, it's like a one-way street. Then that's why it seems to be very inefficient.
Yes, exactly. And this is a cherry-picked example, and I'll show you kind of the whole pool-wide distribution here. Because yes, 3x is, we're not just always giving you 3x. Obviously, it's very market-based. If someone comes up and purchases most of your liquidity as an option buyer, that's when you're hitting that cap of 3x more fees. But of course, the baseline is here. Whatever you're making on Uniswap, you will make at least that much in Panoptic, because it's the same position, right? It's the position just sitting in Uniswap earning those LP fees. The dates here to clarify, yeah, there is some error here on the dates, but to give you context, this took place, I think, around January or February, and it took place just over less than a day. So this 21 is 21 o'clock, 0 o'clock, 0 o'clock. So just within a couple of hours, this position was earning, over $100 more than what they would have earned in Uniswap here. So I'll switch to the next slide, which will show in a second, actually. So basically, the 3 times more fees on Panoptic, you can basically invert this multiplier into percent of, well, then how much are you losing on Uniswap? So this 3 times more fees, it basically translates to 67% losses. So this position on Uniswap is essentially foregoing the opportunity cost of a 67%, incurring a 67% loss because they're not using the Panoptic protocol to deploy their capital. So of course the question is, are the risks the same? The impermanent loss risk is the same, the LVR risk is the same, the price risk is the same, and that's because the price range and the AMM are exactly the same. So everything's the same there. Really, the only difference here is that if someone borrows your capital, you might not be able to withdraw your position immediately like you could in Uniswap. So that is the only added type of risk here. But for a lot of LPs who are doing this, over a longer time span, that is totally an acceptable thing in order to earn, up to 3 times more fees for going 67% loss. There's also this aspect in Panoptic where you can forcefully exercise the person who is buying your liquidity for a small fee. And so that's kind of a good substitute for being able to close your position. But basically, for the same position, almost the same type of risk of the position, the delta, the gamma, the impermanent loss, it's all the exact same. You're basically losing out on 67% of fees by not deploying this position into Panoptic. And so, yeah, we can actually see the position on Panoptic here, where they created the position and they were earning $180 in fees. And we'll go over this a bit more, but they actually profited a lot more than $180 by creating a bearish position, which is something unique to Panoptic that I'll go over in a bit. So here's the distribution of the loss versus Panoptic. So I kind of cherry-picked the example, right, of the 67% loss case was the one we just saw. But on average, your distribution of loss versus Panoptic is going to range anywhere from 0 to 67, with 67% being the highest loss if there's lots of option buyers on Panoptic. If there's a moderate amount, you're going to be seeing something closer to the 15 to 20% range. So actually, on average, I think it was about 19% losses on Uniswap versus Panoptic. Uniswap LPs could be saving that 19% by migrating to Panoptic for the same position, but with more fees from option buyers. So yes, any comments on the distribution here?
No, that's right. The numbers speak for themselves. So a lot of the positions are outperforming the exact same one on Uniswap, which is kind of a no-brainer if you ask me. Again, the risk, as you mentioned, is that you may not be able to close your position fully. But if it's still in range, then you're making money, so that's fine. And if it's out of range, you can force exercise the other person. So there is an escape route. But yes, at the end of the day, it's just kind of that extra source of revenue, which is not on the trading side, but rather on the LP layer that allows these fees to be higher.
Yeah, exactly. And there's this kind of big bar here of no loss versus Panoptic. This just means that the LPs deploying through Panoptic are earning the exact same amount of fees as the Uniswap LPs. That's because they have this big option position, and nobody is coming and buying it up. So it's actually a ripe opportunity for someone to come here and purchase this liquidity to buy an option, basically bet on the volatility going up. So lots of opportunity there for liquidity in Panoptic to buy options. Otherwise, there's a bunch of positions that are being purchased up, and then they're kind of all along the spectrum. And we see this big spike here of some people making, basically a 30% loss versus Panoptic, which translates to, I don't want to do math in my head, but a multiplier of like
1.4-ish, so 1 over 0.7. Yes.
4. Okay. 40% more. So a 30% loss, 40% gain for Panoptic LPs. So kind of interesting distribution. This will obviously change as we go further, and there's more or less option buyers. But as far as the first kind of month or two of Panoptic, this is how the ETH USDC losses have been. So yes, to conclude, kind of the LVR LVP thing. This is kind of a joke, but like LVR, I think it's loss versus rebalancing, a very common metric that people are saying LPs should use instead of in permanent loss. But it's kind of like an apples to orange comparison, because all these losses are theoretical losses. They're opportunity costs. They're not actually incurred. When you go do your taxes, you're not reporting your loss versus rebalancing. You're reporting your actual realized profits and losses. So loss versus rebalancing is this metric commonly promoted to be the best metric of measuring loss for LPs instead of impermanent loss. But for the sake of this discussion, I think it's fair to point out that the comparison there is quite different. It's a lot of LPs are coming to Uniswap to harvest fees. They want to make money. They want to earn some fees, but they don't want to set up, a market making bot. They don't want to set up these positions that they have to monitor constantly, and every low price move they're ready to react. And so I think the profile of LPs for a lot of people are quite different than the profile of a constantly rebalancing portfolio that rebalances, with a specific delta threshold and is constantly being monitored and managed. So that's the point I'm trying to make here, is that LVR, which has this loss of somewhere, I think people are estimating 10 to 20%. You could be making more by rebalancing. This is a very different, more active profile. Whereas this loss versus Panoptic that we're presenting here is a much more similar profile to what LPs are doing, because it's comparing the exact same position. So if you come in as a more passive user, or even not like a high frequency trader, right, and you're LPing, this is the exact same profile that we're comparing apples to apples. You're either directly on Uniswap or indirectly into Uniswap through Panoptic. So I think it's a much more fair comparison to see like this even greater, around 20% on average loss against Panoptic here.
Yes, amazing. So yeah, and so again, anything to add, maybe, or anything else you wanted to cover?
Yeah, I have one extra slide here about the bearish positions.
Yeah, for sure. Again, the account we saw was right directionally, but also the fees contributed quite a bit. But yeah, it's okay to be bearish, because you want to have both sides, and then if it's only going up, it's going to explode in a way that is like something that snaps over time. But if you allow these markets to be created by having bullish and bearish trades kind of compensating one another, it helps with repressing volatility, maintaining kind of a more kind of a less wild price action. So yeah, let's go over some bearish trades here.
For sure. So this is kind of the bonus of this, not really related to LVP, but on Panoptic, you can actually create bearish LP positions. So this is a graph here of Uniswap LPs. You always have to create this slightly bullish position So this is what the payoff of a very, very tight range LP looks like on Uniswap. If you expand your price range, you still have a similar position in that it's always bullish. The value of your LP position goes up as the price goes up. However, that would have been bad for this position that I showed you earlier, because the price actually went down. So the lucky thing is you can LP into Uniswap, but also kind of reverse the direction that you're LPing by deploying through Panoptic. So you can do it bullish, as you always do in Uniswap. You can do it bearish, as you can flip it, or you can even do it delta neutral, where you earn twice as many fees, but you're basically hoping the price stays near the center. And so if we break down this earlier position that you saw had like a 67% loss versus Panoptic, about 20% of the fees earned were from Uniswap fees. So that was from a liquidity position being deployed in Uniswap. And then 40% of the fees earned from the profit made was actually from that loss versus Panoptic. So this is that extra spread that you get in Panoptic by the dual use of your LP, getting some extra options premium on the side. So a lot more actually gains from deploying in Panoptic than they would have in Uniswap. But then the interesting part is this last category, which is just from pure price movement. And so because this position was set up, if you notice, it's kind of the flip side of the LP position in Uniswap. So it's a bearish position, whereas normally in Uniswap, it's a bullish position. And so a large chunk of this $316 profit in just like less than a day, I think it was like a couple hours, is that they earned a huge chunk from just the ETH price dropping. And so they bet directionally correct on top of them getting a popular position that was purchased up as an option. So kind of every factor was favorable on their side. And so that's why I'm highlighting kind of the best case scenario here is to be earning a big spread in Panoptic and also kind of being correct on your volatility or directional bet here.
Yeah, amazing. Again, you can only do this on Panoptic within protocol. You can do this by borrowing somewhere else or kind of bridging funds and having collateral all over the place. But yes, Panoptic makes this all centralized into one place.
Exactly. So yes, that's all I had for today. I know we're over time.
No, we're in good company. But yeah, thanks a lot, Brendan. This was cool. Yeah, the loss versus rebalancing, how we can convert Uniswap LPs if you're an LP listening to this yourself. The advantages and the versatility of thinking like an options trader when you LP is extremely useful. So that's kind of what we're going to be pushing. I mean, starting again since ETH Denver, but that's kind of the next step. Can we convert LPs into options trader and have them be a lot more equipped for capital management and risk management?
Yeah, it's eye-opening. The whole LP equals options thesis is a beautiful way of looking at it.
All right. Okay. So if that's it, yeah. Thanks very much, Brendan. Thanks to Rosalie as well. I will see how much the intern follows our advice, but at least they've been making money following our advice, so they should keep doing it. But yeah,
but not
no advice. We only give advice to one person, the intern. It's true. No one else should be listening to it. But yes, this is education. But yeah, everything we say is financial advice. This is education on the world of options, on the world of Panoptic. How can you actually be a lot more sophisticated in your trading, but also a lot more profitable? So that's kind of our message here with Panoptic and the Options Hour. But yeah, coming in up to the hour. But yeah, that's a good place to end it. But yeah, thanks everyone for showing up. And if you have any questions, join our Discord, DM me on Twitter if you want, or Telegram. We have all of these conduits. Feel free to ask. We're happy to answer any questions.